everybody. Welcome to TraderMerlin Show for your Friday edition. TGIF as well. I see some nice shout outs there. Hello, Tom. We got John Donardo, Batista, Daryl, Tomasina, Dana, Big Eb, Alex Mukas, Happy Friday, David Rostakor, Skilled Stocksman, Less Gold as well. So what a wild week. What a fun, adventurous, wild week with everything from cryptos to commodities to bond rates to indexes. And of course, looking at the first 2 days of December, notice I got a little bit of a blood red screen here for the trading week wrap up. If you look at the indexes, Nasdaq down about almost over 6% in just 2 trading sessions off of its all-time high. So pretty big pullback there. We'll see if that continues. But cheers. Happy Friday, and thank you, Carrie, for the, I think it's called Bibbin Foster whiskey. Great bourbon today. I hope you're having a great day. All right, but I think Batista says, Russell, back to the box. I think it's even beyond the box now. Let's start things off with 2 things. First, as you guys know, I'm back to doing the trading week wrap up, the December challenge. Tom, you're the only one. Just the 2 of us, buddy. I could start singing some Joe Cocker right now if you want. Just the 2 of us. December challenge if we try. I wouldn't do that to you. I'm doing 100 push-ups. I might have to change it because Tom's trying to one-up me. Tom, I think you got me by a couple of years on age, too. And you're doing 100 push-ups, 100 curls, and lunges? Good God, my man. You're going to be sore as a puppy when you get done with all those ones. But good for you. Again, anybody who wants to join this list, and I can give you a shout-out and try to hold you accountable. Whatever it is, doesn't have to be health or fitness-oriented. It could be, hey, I want to read 16 books this month, or I want to run a mile a day, whatever you want to do. Give me something out there that's your challenge for the month, and challenge yourself to do something different. Even if it's, I want to go to the XLTs for an hour a day and learn, or work on my trade plan for 50 minutes a day, or as many of you will tell me, Merlin, you should write for 1 hour a day on your book. Probably not going to happen there. I would, but I won't finish it. Yes, you will. You can do it. For me right now, Margaret, 20 is kind of the peak when I start to lose form. My max that when I'm in peak shape is about 50 in a row. So I hope to get back there, but I'm a long ways away. I could probably do 30 right now and have good form. After that, they really start to look terrible. Cool. So Les, let me know what it is. You can email me, anybody who wants to join this one. I just think it's something fun to do. You know, we always talk markets and crypto and stocks and futures and things like that, and it's money, money, money. But I think our brains, our fitness, our health, our well-being is probably one of the best things we can invest in anyway. So pick something out there. If you want to add it, you can email me at TraderMerlin@gmail.com, and I will add it to the list. Right now, we've just got Tom and myself. We can do it. All right, let's move past that and go into what's happening in our current markets. A lot of fun. I mean, again, some of these moves have been fantastic. I will bring up TradingView over here since I'm not using TradeStation anymore. And there is my dream. Okay, so let's start things off with the top indexes. Gold was your best performer today, but even gold kind of chopping back and forth for the past couple of days. If I zoom out here, it's really nothing that's noteworthy, right? There's nothing that screams, hey, it should go one direction or the other. I had this red line on, and I was actually feeling pretty optimistic for gold as we broke to the upside. But then, last week came crashing right back down, and now kind of hesitating for the week, down for gold for sure, but really nothing that noteworthy. I'll probably just get rid of this line. And why not? Just a distraction at this point. But price-wise, it's traversing sideways. At some point, I might throw the yellow box on that one. Is the down move due to Omicron? Well, I guess we could say, why is the market down overall? And what I love about the mainstream media, which, you know what, I had fun with the donkey of the day the other day with Jerome Powell. So let's just throw a little baying or whinnying, whatever you call it, donkey sound, for a donkey of the day. Today, my donkey of the day is, I'm going to say, it's not Yahoo Finance. It's whomever does this app. So I can actually tell you. So I use an app on my phone. It's the one that comes with Apple. So it's whoever does the Business Wire top stories on Apple. That is the donkey of the day. Because every day this week, and I mean every single day, I like to look and right when I get up on my phone and just go to Apple and see where the markets are at, right? If I don't wake up by 6:30, which hasn't been happening for quite some time. Their app, every day under top stories, if the market is down in the morning, it's Omicron. If the market is up, then fears of Omicron have subsided. So they've got this narrative right now in the market that this Omicron, it's Omicron, oh my God, oh my God, oh my. Look, I don't think that this is what it's about. Certainly if it does start to pick up some traction and we see the cases spike and all of a sudden things go into quarantine and back into lockdown and we go down that road, I think that could be a factor. I think what you're seeing with these markets, and again, this is me personally, I would love it if you guys chime in here on what you think or think I'm way out of line. But here's my hypothesis. We came out this morning with a jobs number that was pretty bad. So jobs obviously are critical to getting this market back on track. Our unemployment rate went from 4.6, they were expecting it to be 4.5, and it came out at 4.2. That's great. But what they were focusing on was the non-farm employment change, which went from 546,000 new jobs being created. The expectation was we're going to come out at 553. So they thought we're going to actually increase the number of jobs, right? We're expanding. Stimulus is doing its thing. We're going to start to move forward. Maybe the infrastructure money pouring out to construction companies, and they're expanding. We didn't come out at 553. We didn't even come out at the previous number, which was 546. We came out at 210,000. Which is less than 50% of the forecast for new job expansion. That's why markets freaked out, because here's the domino effect. And maybe if I have time this weekend, guys, I'll try to draw a diagram. And the diagram is going to go like this. Markets, what are the markets looking at? Well, right now, the fundamental piece of the markets is inflation, right? We're worried about inflation. I'd say that's probably the number one thing that they're all freaked out about. So inflation gets out of hand. We have to do something to slow that down, right? Everybody agree? Hope you all agree. If inflation gets out of hand at 6.2%, next Friday we have a new CPI number, which could make it 7%. Who knows? But if that gets out of hand, markets go to hell in a handbasket. Not because of inflation exclusively, but because of all of the actions and steps that are needed to combat inflation. So, inflation gets out of hand. What do we do? All right, well, if inflation gets out of hand, we've talked about this many times. We raise rates. And we stop asset purchases by the Fed, which should in turn retire money, pull it out of the economy, and all of a sudden, instead of creating, $15 trillion worth of new money in the last 2 years, we start to put some of that back, right? Return money supply back to the digital ledger that it was created from by the Fed. Those two actions right there, raising rates and pulling money out of the economy, is going to drive the dollar up significantly. It'll also make the cost of capital for businesses much higher. Not much, but start to get higher. Okay, so those are pieces to slow down inflation. But the market's looking at it going, holy crap, if the jobs number came out at half of what we were expecting it to be, that means that we have a fundamental problem in job creation. So we need to stimulate jobs. What do we do to stimulate jobs? We pump more money into the economy. We weaken the dollar to stimulate economic growth. But wait a minute. We can't do that. So now it goes back to this discussion we've talked about, which is stagflation. And the challenge is you put yourself in this position where whether you try to fix one problem, the other one gets worse. You try to fix that other problem, and the other one gets worse. So I think this is why the markets are starting to panic. It's saying, hey, we're way overbought. We've had a completely propped up financial market, which is scaring the hell out of people. And now I'm starting to see problems happen on maybe the jobs front. Maybe it's going to be on the inflation front. Maybe it's going to be on bond yield front. Whatever the case may be, they're starting to back themselves into a corner where there aren't a lot of solutions to get out of it. So long-winded, Margaret, that's what I think. I think, for me personally, is the big problem and why these markets are jittery. And, I think normally there's this thought that the Fed's going to step in and bail them out. The Fed's going to, don't worry, the Fed will do it. They've got bullets in the gun. Don't get me wrong. They've got plenty of bullets in the gun, but they don't know where to shoot them, because if they shoot here, they're going to hurt this piece. If they shoot there, they're going to hurt the other piece. That, to me, is the problem. Hey, hello, Gary. Good to see you. That's a huge miss, Mario. I mean, less than 50%. It's like, wow, that's a monstrous decline. Let's see what Tom says. Tom says, my current thesis is that the SPX representing artificial things like money printing and tech hype, Russell represents the real world. Okay. But remember, if you have artificial money printing, it's impacting every business, right? So certainly the Russell would be impacted by that as well. But when we look at small businesses, which is what the Ruppel, this is some good whiskey. I'm already saying Ruppel instead of Ripple. Maybe I'm drinking Ripple. When you look at the money impact on all these companies, yeah, big ones probably going to benefit the most. Small ones start to struggle. We saw that during the lockdown back in 2020, where I was going around to Home Depot, and Home Depot was open, but the small little mom and pop stores were closed. And who knows why? They weren't deemed to be essential, but Home Depot and Target could stay open, and Walmart as well. So small businesses, I think, got hurt a lot more than the big businesses, which is why you've seen some of the major market indexes continue to soar. And maybe, hello Pepe, and maybe that's part of the reason we've seen the Russell, which I'll bring up here, which had a pretty bad day today, down about 2.2%. Here is your Russell. Not only is it back in the yellow box, it's almost near the bottom. I'm just going to, for giggles, fast forward it. I didn't want to do that. This is because of Tom. Tom, you said it. You brought it up. Do we draw that little box? To me, personally, I think that overall this box is negated, but the downside hasn't been violated. So I'm still holding the downside as a credible demand zone or demand area. The top one, I think it's violated. So I wouldn't worry about this top level piece at 2368 as supply because it's already been eroded. But demand still in place at 2100 on the Russell 2000 futures. Okay. So the yellow box is back. And I agree with you. I think the Russell is more likely to represent real world. Again, during market booms, small caps do great because normally there's a merger and acquisition aspect where big companies buy a lot of these small ones. Normally they're paid a premium and you get some nice bull rallies. Well, if we get below 2100 next week, I think that we could see a little bit bigger. That's a wrong grammar. Significantly more fear in the marketplace, what I meant to say, if we start to get a close below 2100 on the Russell 2000. And to me, I think that is the big thing we should be looking for. So you notice this week, the Russell, for its last 5 days, I'm going to put on a weekly just so we can see the candles here and get a perspective of it. It's been a fairly ugly month for the Russell, right? It's been four weeks in a row of nothing but down. Granted, this candle for this week wasn't as big as the previous week, but we're also, I think, visibly coming into this area of demand. You look at something like, let's start with the Dow Jones Industrial Average here. You notice we've had this 3,400 line. Dow came right down to it. So it's also been 4 weeks in a row of nothing but pain for the Dow Jones Industrial Average. Keeping with the index theme, here's your S&P, which surprisingly, it's only down 4.35% off its peak to where we closed today, which is much better than these other indexes. We did not close down below this zone here, which is a positive thing in my book. For those who want to look a little bit clearer, we can look at the daily. We closed below it 2 days ago, but now we're back above it or in that zone, which isn't really a strong zone. It really was this area here. I guess I should have cleaned this up and I could have put it here. That really would be my zone right there. Look at the timeline I may call the yellow box. The Biden box. Oh boy. Let's not go political, Tom. The false breakout on Russell. Look at that monthly chart. Correct. So if you do the monthly, and again, this is always very important. If we go to IWM or RTY, you have this just a wick above it. And I'll be honest. To me, this is one of those cases. There's an old phrase that I love in the industry, and it sounds bad, but it really is important. And it is this: if you torture a chart long enough, it will tell you anything that you want to hear. And the reason I say that is because if you look at this chart of the Russell 2000 right now, if you looked at the previous month, you'd have said, oh yeah, I wouldn't have taken that trade if you were using the monthly trades. If you were using the monthly time frame, you would not have gone long here. But how many of you, honestly, are making your entries and exits off of the monthly chart? Unless you're in strategic investor or doing long-term portfolio management, that's a long time to wait for market confirmation. Granted, you're absolutely right, Margaret. You're absolutely right that you wouldn't have taken it if you were using that monthly chart, but I just don't think a lot of people are using that as your exclusive trigger. A lot of people would have said, hey, let's go to the weekly. And now you're going, oh, I got a weekly close outside of it. Now I'm going to take that trade, and all of a sudden, boom, you got ripped. So, again, we can torture ourselves long enough. That chart will tell you anything that you want to hear. So I don't look out necessarily that big on a monthly. I do like looking for candlestick patterns on monthly because it might set me up for a bigger move in that security. But as a trigger for our trade, most people aren't going to go out there and look at that monthly time frame for entries and exits specifically. All right, so we've got the Russell. We talked about the S&P. Here's the Nasdaq, which is real ugly over the last couple of weeks. This is actually a 6% plus down move. Let me see if I can get you a little measuring object. Well, Bob Dunn is using it as a trigger signal, but he's making his trades on dailies and weeklies as well. So 6.57% off the peak to where we are right now for the Nasdaq 100. A pretty ugly week, but again, as I mentioned on our show the other day, does that look like this is done? No, this is just a pullback, folks. Granted, no one likes to see in a 2-week period the market's down nearly 7%, but it's still got a long way to go before the proverbial doo-doo hits the fan, which it could come. If we start to see this fear precipitate, the Omicron virus does become more of an issue, and we go back into lockdown mode, and now you have a real catch-22, as I mentioned, you'd have the government saying, hey, we need to do more stimulus, we have to do more unemployment support, we'll pump more money in the economy, and all of a sudden, the economists are going to go, we already have inflation at 6.2%. I don't think our markets will sustain a 9% inflation rate. And then all of a sudden, things really go haywire. So again, I think that's the main reason you're seeing this. You're seeing this market weakness because of the reality, the realization that they're backing themselves further and further into the corner, and if it doesn't somehow fix itself miraculously, they're going to have to throw money at it, and that creates it's like more fuel on the fire. So who knows where we'll go from there. All right, so we talked about the broad market indexes for the week. Let's look at the G to the C. I mentioned gold, not really looking that great. My silver was executed today. Well, I'll receive the shares, but my options expired today. You can see we closed at 20.85 on silver, and my put options I sold were at 21. So it looks like I'm down 15 cents right now, but I collected a bunch of premium. I don't remember how much premium that was. It was 2%, so it was like 40 cents. So I'm actually in the money on silver, even though I'm down. It looks like I'm down, having bought at 21. It's at 20.85, and I believe my average price is somewhere around 20.61, 20.62, but I'll have to check the account for that one. Still haven't been delivered. I get delivered on Monday, but yep, got exercised on those silver options. The other ones, USO, which I also sold for 7 days last Friday, even though we saw a pretty ugly week this week. Here's your daily. Today's bounce up saved me from being executed. Exactly, Tom. More money chasing less goods equals inflation, period. I heard a really good quote. As you guys know, I listen to a lot of different podcasts. A lot of them have to do with digital assets and cryptocurrencies because I think that's the future of financial markets. I'm trying to remember exactly what the quote was. Damn it. It has to do with just counterfeiting. So basically what the Fed is doing is counterfeiting illegally. Right? And inflation is a form of counterfeiting because usually it's more money chasing the same amount of goods and services, as Tom just pointed out, which is the definition of inflation. Unfortunately, the Fed can print money. If you and I were to print money, it's called counterfeiting. If the Fed prints money, it's called inflation. So, very interesting. No, and again, Big Eb, I am absolutely totally fine with SLV. I'll sell some covered calls probably on Monday once I'm sure it's in my account and, make a little bit of extra rate of return. But I think long term, I'm good with silver. What is striking for me today is the jobs report number and the decline in equity markets and the increased talk of Omicron and inflation, really expecting to see gold and silver rally a lot more than this. So I may even build a bigger position in SLV, which I'll bring up for you. I may look to be building a bigger position in SLV. We got a nice hammer formation today on the daily chart for silver. It still looks real weak. I mean, it's a pretty impressive slide. Silver in just the past, let's say 3 weeks, 14 bars. So 3 weeks is down 13%. That's pretty good. That's a pretty decent slide. Not really into any strong area of demand. I don't like that. But long term, again, I'm thinking silver, you'll be back up at those high 20s to 30 mark in a short period of time if inflation does continue to spike. NQ is monstrous. What's the most contract you've ever had on the NQ? Probably a dozen, less than that. I don't, my futures trading, I don't get too wild with the futures. I tend to get bigger with my options plays, as some of you might know. Marcus says, because of COVID, can we use the DAX as a leading market? I'll be honest, I don't really look at too much at foreign markets anymore. I usually will just glance at them before, if I'm, in the days where I was day trading aggressively, 6:30 in the morning Pacific time, and I'm waking up earlier, I would go out and look at the international markets to steer. These days, because I'm trading things like Forex and futures, which have 24-hour components and cryptocurrencies, I don't get up at 6:30 anymore. I just don't do it. Unless there's something set up, a trade set up, like there's been a few that I've mapped out with you guys, some great shooting stars and hammers where it's like, you know what, I'll get up for those. But for the most part, I'm not looking at international markets anymore. Just calling it what it is. Ooh, John, Slidever as opposed to silver. How about Runver? Let's just keep it going. I want it to go to the upside, bud. Ryan Johnson, why would inflation strengthen the dollar? Okay, so when you have inflation, as Tom put in there, you have too much money chasing the same amount of goods and services, right? And we've seen that printed. We've had since 2020, we've had $15 trillion of new money printed. The previous 70 years, we had 2.5 trillion printed, just to give you an idea of how crazy the money printing has been. So in order to slow down inflation, you have to remove some money from the money supply. So they're going to do that by retiring bonds that they have and take those. Right now, they're buying $40 billion a month of mortgage-backed securities and $80 billion a month of treasuries. Now, they just started to taper, but those are the numbers last month. What they're going to do is they're no longer going to be spending all that, and they're retiring bonds, which means they're taking some out of supply, and that means you have fewer dollars now. You have the same amount of demand for dollars, but you have fewer of them. What's going to happen to the price of the dollar? Price of the dollar is going to go up. On the other side, you have yields have been rising. Now, this was actually a great day for yields because if you look at the price, what happened to the 10-year today, here is my 10-year. You had a 7% slide on the 10-year. This is actually, for me, very significant because you see this trend line I have in here, and it's not drawn perfectly. I mean, really, if I was to draw it perfectly, there is no way for me to draw this one perfectly, I'll be honest. Because you notice all the little tipping tails here. Do you draw it to there? Well, do you draw it through here? You know, this seems to be like where it touches the most times. Well, either way, you know, you're seeing a little bit of weakness. You know, if it gets down into this area, which is getting down to the 130, right now we're at 134.6 on the 10-year. But if we get down to the 130, the 125, clearly whatever uptrend line you want to draw is broken. So this is an argument for a weakening dollar, okay? If yields start to rise, if the 10-year rises, then more people are going to start buying bonds. That means they're buying dollars, and all of a sudden that could further exacerbate an accelerated move to the upside in the dollar index. Now here is the Dixie, so you guys can see what's going on with the dollar. We had a little bit of a boring day, but that trend is, yes, Margaret, that was the yield, not the price of the 10-year, but the actual physical currency yield, yes. So, you know, here you can see the dollar for the past couple days has been, you know, choppy, but we've been in a pretty strong, powerful uptrend here, which, you know, the trend is your friend until the bend at the end. It's funny, this little dip right here, I remember we did a Monday morning must know, I was talking about this level, saying, hey, if it gets in here, that's a great buy point. And I mean, it's a perfect uptrend type of environment for the dollar. Hello, Tony. Good to have you with us. Happy Friday, my friend. So, to go back to, where was the question about Ryan? That's part of the reason inflation would strengthen the dollar, because they're removing money from supply to help fight inflation, right? Less dollars chasing those goods and services. And also, they start to raise interest rates. So right now, we're, call it zero. If we jump to 25, well, we're 0 to 25 basis points. But let's say they jump from 25 to 50 basis points. That means if you hold dollars, you're going to get more money by holding dollars. You were getting 0.25% interest. Now you're going to get 0.5. So what will happen is more central banks, more big governments, not you and me, but the big guys will be buying more dollars. So I have more demand for dollars, but I also have dollars being removed from supply, which does what? Makes that dollar move up even faster. I always thought government counting figure lowered the value. Yeah, well, it normally does. It lowers the value of the dollar, right? So when they print a bunch of money, in theory, it's supposed to drop the value of the dollar, right? Because you're diluting the money supply. However, the inflation side of this is what's driving it up. Inflation, the knowledge that they will be raising interest rates here next year. We've already heard them say it's going to happen in 2022, which means we'll get 2, I think 3 rate increases next year, which means the dollar will get more valuable, which means the Europeans, the Chinese, the Japanese will be buying more dollars for their coffers, and that drives up price even more. So it's tough. No, Mario, it hasn't stopped. Last week was a Thanksgiving one, and I just didn't have a chance to prep it and do it, but there'll be a new one coming out on this Monday. We'll have a Monday morning must know. Thank you. You like those, huh? They're just some fun little thing I throw together. It's always nice to, kibitz about what I think is going to happen for the upcoming trading week. All right, so hey, great question, by the way, coming from Ryan about inflation and dollars pushing it higher. So I wanted to bring that one up because today's yield just getting crushed. Here's the 30-year. That was down almost 5%. That's pretty important. You guys see I've got these lines drawn. This right here is a descending triangle in my book, right? My book. That's a descending triangle. You have this blue line as your base. You can see you've got this big rounding piece here. It hits it, rises up, doesn't go up as high. comes right back down to what they'll call that baseline. Now, if you are like me and a fan of measuring objects, what you would do is you go from the peak of that triangle to the base, and you would move this to there. And that gives you an idea, using traditional technical analysis, not that this is guaranteed to work or anything, that says that this 30-year rate should, right now, because it broke that descending triangle, should go down to 1.085. That would be great for the economy. That would be great for job creation, because it means that the long-term cost of capital is going to become much cheaper. Who knows if it'll get down there. I personally do not think that's going to happen. I just wanted to show it because someone asked me a couple of weeks ago about measuring objects and do I use them. I like to do them when I think that there's a realistic chance of getting down here. Now, is it impossible? No. But I just think it's a foregone conclusion. We're in a rising rate environment, and if the Fed raises the short end of the yield curve by 25 basis points, most likely, if it's a normal yield curve, that long end will rise as well. So kind of strange to see this thing break down below that baseline, but hey, it is what it is. The 10-year is even more aggressive, but it's not breaking to the downside. It's kind of coming back into this upward trend line. You notice the picture is almost inversed, right? You have like an ascending triangle here where pressure is pushing up, and on the 30-year, you had a descending triangle. So kind of cool. The flattening of the yield curve is concerning you? Yes, right, because what happens in a normal market environment, guys, we start off with a normal yield curve, which looks like that. And then it flattens, meaning the short end, which is my elbow, starts to rise, but the long end, it can stay where it's at. But when that short end rises, we get to the point here where any down move in the long end, and now you get an inverted yield curve, which means in the future you're going to make a lot less money. It creates a lot of frenzy right now, but that generally can create issues big time with regards to inverted yield curve going forward. And that's historically one of the greatest indicators of going into a recessionary environment is an inverted yield curve. And we saw one in 2019, in August of 2019, and of course we had our quote-unquote recession. I don't know if you could call it that. The COVID dip is more like it. Interesting, the tech is not rising on the lowering yields, at least as of late. Yeah, I'm not exactly sure what to make of all that. You look at something like XLK, which has been for the month of November, was the best performer. We looked at that the other day. Let me just zoom in here. So month of November was a great performer. All of a sudden, the first 2 days of December have been brutal. Or sorry, let me go back to the weekly here. There you go. Our last two weeks have been ugly. For the month of November, it was great. You had these really big candles, and even though we saw last week a fairly sharp decline, it still posted one of the biggest gains in the S&P 500 sectors is technology. Well, right now, who knows exactly why this is sputtering like this? I just think that technology's gotten way too far ahead of itself. I mean, look at this chart. I mean, this is crazy. Since those lows that we saw back in 2020, I'll go from, and again, it doesn't do a snap, so this is rough, to the peak. There's 155% gain for technology overall. Now, if you look at something like the S&P 500, were we anywhere near that? Yes, we were. It was actually a pretty damn good run as well, but significantly less at 118% gain, whereas technology was up 155. So I think it's gotten a little bit ahead of itself. Remember, if you look at things as I do from an equilibrium perspective, if the S&P 500 has been doing this, and again, I'm using graphic lines here for people listening to the podcast, if that's the average for the S&P, and I've got a couple outliers that are way above it, like technology, and a couple others have been way below it, pick some different sectors, ultimately those will average out over time because that is what is the S&P 500. So, I look at it, each individual market segment as having an element and a component of elasticity, meaning it should pull back to the norm, and I think tech is probably headed for that pullback. It's about time, right? Let's see. What else we got? Can you insert an interest rate chart on the 10-year to show relation of interest to the 10 or 30? Not with this platform. I don't pay for a full version of TradingView. As you guys know, if I can get it for free, that's what I want to pay. So I'm really not, unfortunately, I can't do that. If you pay for the full version, you can, but yeah, I get plenty of action from what I need out of this without having to do any of those modifications. Now, so we talked about major indexes, right? An ugly 2 days to start. You can see on the S&P. We'll just show you the first 2 days. Even though you had this big green candle yesterday, an ugly one today. Gold, we recouped some of it today, but most of these major market indexes really looking ugly, especially Nasdaq. The technology one is pretty ugly. this is a little bit concerning. I think, again, if we get down to that 15,400 mark on the NQ, that's what I think you'll hit next week. The question is, do we break below that? If we do, I think you got a lot more downside movement to right around that 14.5. So that's a 900-point move on the Nasdaq once we get past a close below 15.4. Now, the other story here is cryptocurrency, which has been getting murdered today. I mean, this is just getting absolutely slaughtered across the board. You notice here, I got nothing but red on the screen except a couple different positions in the portfolio. Some of the bigger losers, Civic, Render, and I'm really excited about Render being down. As you guys know, Render, this is my buy area for Render, so I'm looking to buy some of that. Also, Sand. I've got a long way to go for Sand to get down there, but these are two that I definitely want to have in my portfolio. But a lot of buying opportunities, I think, in the crypto space. However, it's a question of, do you wait? Do you wait a little bit here on some of these? Because judging by the trend, what's going on with them, they could go much lower. I had a buy point here on Polkadot, which I wanted to add to my portfolio. But, you just look at the way it bounced here. This small bounce off this demand zone before, it didn't rally really hard, and it came ripping back down. So I wanted to buy at 33. I did not. I'm foregoing that until maybe we get back down here into the $25 range, just because it feels like the trend right now in crypto could be a deeper pullback. And it's funny because you have people that are going, oh, Bitcoin's not going to go down that far. It can't fall that far. Guys, look where we've come from. This is your daily of Bitcoin. If you look at these levels, is 30,000 an unrealistic target? No, not at all. 30,000 is a very realistic target, actually. I think you have some stops along the way, but, right here is, to me, a point where I will most definitely be adding some. And you can see there's a few lines on here where I've added. I bought at 57, 56, 54, and 53, so I'll take that line out. And now if we get down to 48, probably a little lower, more like 47 in here, right in that middle part, I'll be looking to buy some more Bitcoin and maybe pick up some of these other cryptocurrencies. But it's not looking so good from the crypto perspective. And just given the sharp move that we've had up, it could easily have a pullback down. And hopefully we don't go back below 30,000, but anything is possible with these cryptos. 7 big tech names drove a lot of these gains, and now they're wavering. Yeah, remember we talked about those FANG stocks. You still have good strength from things like Apple. I mean, Apple's still pulling this thing, and it's one of the major components of almost every major index out there. You've got your lovely Tesla, which is not a major component of some of the indexes, but it's still this wonderful move that it's had has been a big catalyst. One that has been hurting it, Facebook, right? So Facebook not looking so, one sec. Facebook has not been looking so great lately. It feels to me like their uptrend is pretty much over. We have this line right here at 300 on Facebook. I think if you get a close down below 300, you're looking at 255 or 277 in a pretty quick hurry. Even though they changed their name to Meta, kind of interesting. You guys notice there's two major tech companies that have changed their names to reflect the new digital space, or the metaverse, if you will, or some area of crypto. So you have Facebook, which since they've done their renaming has done literally nothing but fall. And then you have Square, who changed their name from Square to Block, and they've pretty much done nothing but fall ever since. So maybe rebranding right now is not the thing to do. You had a almost 6% down move today for Square. It's been a pretty ugly. I think this is pretty much because Jack Dorsey left, not necessarily the rebranding. But anyway, thought I'd share those two. Those are certainly big movers in that space. What else? I think I had some questions. Let me go to a couple questions that came in just so I can address those and make sure I get to all your questions. And this is an interesting one. It's all subjective, but Will sent this one in yesterday. He says, what's the main reason that Elon Musk has been able to manipulate the market time after time without nothing more than a slap on the wrist from the SEC? Am I delusional in thinking that any other person who attempted to do the same thing as Musk would have already been in jail? No, you kind of have to look at what he's doing. If Elon Musk were to tell you, you need to buy Tesla for this, and this reason, that's investment advice. He could get in trouble for that. What he's saying is, I think Tesla's overvalued. He can manipulate these things just by, it's his personal opinion. He thinks Tesla's overvalued or undervalued. So is it right for him to do that? I believe no, just because he's such an integral part of these companies, whether it's SpaceX or Tesla, whatever. I think it's wrong, but is it jailable? No, I don't think so. he's not giving advice. He's not doing insider trading information. He said a couple things like, he did say something once that I think got him in trouble, and you notice he hasn't done it again. I believe he said something like, we had a tender offer at $420 per share on Tesla. That was obviously a while ago. That, I believe, is illegal. Not exactly sure how that's translated. I'm not at work for the SEC or anything like that. But to me, that would be bad. I'm pretty sure they reprimanded from that and said you can't do that type of thing. But he's allowed to make comments about his company. You know, he does it all the time. And Christian says he's selling for tax implication purposes. Yeah, because down the road, there could be much greater taxes on his wealth and capital gains. So why not do it now? And the way he did it, I think, was right. I think he actually saved himself any retribution from the SEC by doing a Twitter poll and saying, do you guys think I should sell 10% of my shares? He was going to probably sell it anyway, but the community said, yeah, sure, sell it. So he did. So I don't know. I don't think he did say when he had an investor at $400 when Tesla was well under that. Yep, exactly. Well, remember, guys, Martha Stewart didn't go to jail for insider trading. She did not go to jail for insider trading. Martha Stewart went to jail for perjuring herself under oath, lying in front of the court. So that's why she went to jail, not for insider trading. So, you know, did Elon Musk load the boat and buy it before he said he had an investor wanting to buy it at $400 or $420 per share? If he did that, then there might be some recourse or some legal action that could be taken. But I think for as goofy as he is, for as weird as he is, you know, smoking weed on Joe Rogan and just kind of being an oddball, he's not stupid. He's obviously a pretty smart guy, and I'm sure he's got some lawyers out there that say, hey, you can tweet all you want, but you can't do this. Yeah, exactly. She lied under oath. She perjured herself in court. That's why she went to jail. She's done more jail time than Snoop Dogg. Figure that one out. Who's more gangsta? Who's in the hood? You want Martha Stewart or you want Snoop Dogg? Anyway. So this type of stuff happens all the time. It happened a few years back where 50 Cent, Curtis Jackson, you know, he was pumping some stock that he was in, penny stock, and I think he got in trouble. Didn't go to jail, but for pumping and dumping securities. It happens all the time. You know, obviously, if you are in Tesla, you should probably have your number one person you follow on Twitter is Elon Musk. I mean, he's the guy who's going to move that security 5-10% in a day off some comment. So that's why I don't own any Tesla. And one of the reasons why I don't. Oh, did he really inhale? Did you watch the interview? Oh, he inhaled. He inhaled pretty deep. Yeah, it was actually pretty comical watching him. He just looked kind of out of his element. It was great. Yep, exactly, Tom. He sold for tax purposes and to mess with Bernie Sanders. Yes, Bernie Sanders. It was an interesting little feud that was going on for a while. Exactly. Martha's got street cred. It was just so funny. If you ever want something, you know, like I can't stand Justin Bieber. I think he's a complete idiot. But if you guys want to have something entertaining to watch the celebrity roast, the Comedy Central roast of Justin Bieber. Martha Stewart does a roast of Justin Bieber. That's one of these things. I mean, I could not believe what she was saying. Now, I'm pretty sure she had someone write it for her because this was just absolutely digging into old Justin Bieber, but it was really, really, really funny. Check that one out if you guys get a chance. Let's see. I'll do this last one, and then we'll wrap up, unless you guys got other questions you want me to get into. It's kind of a long one. I think I may actually do a full show on this. He says, how do you use Fibonacci in trading? And that's from Glenn. So what I'm going to do is I'm going to very briefly show kind of the ways that I use it, which does not necessarily make it the right way. It's just how I use it. And I've shown you guys this in the past. But I kind of want to do one, which I think might be more educational for a lot of you, is just look at Fibonacci and say, what the hell is it? How did this, what's the sequence? All right, how does it all work out? Where did it come from? And where do we see this in nature? If you guys once we explain it, and I'll see if maybe I can do this next week, once we look at the sequence of Fibonacci, which is 1, 1, 2, 3, 5, 9, or 3, 5, 8, 11, it keeps on going and going. Once you understand that ratio or how it works, it leads to what's called the golden rule. And if you look at the human body or the model by Michelangelo called, I think it's called the Vitruvian Man, a lot of that is based off of Fibonacci and this sequence of numbers and relationships. Apparently Mona Lisa's face is like a perfect Fibonacci reference to distances. Your human body, the way your hands are constructed, the distance of these digits is Fibonacci. It's bizarre how you see it in nature. If you look at broccoli or cauliflower, it's Fibonacci. It is this very interesting fractal nature of markets where it's translated into financial markets. And I don't know if there's actually any truth to it. I mean, not truth, because I feel like it does work when I use it. But I don't know this spiritual, metaphysical area of it. I just know that it seems to work. So I use Fibonacci in my trading, but not as a religion. It's an accessory, right? It's not saying all my trades are made because of fibs. It's saying, I understand fibs. Let me put them on my price chart. I'm going to buy at this demand zone, but if I can get things to line up with Fibonacci, then even better. So maybe I'll make that a whole separate show. In a nutshell, I'll just show you very briefly. And again, I've done this for you guys before. And let's pick something that's got a nice little move up to. I think we did it with the Nasdaq, the NQ, right? So you've got your Nasdaq moving up here. And one of the things I might be trying to figure out is, well, where might this pull back to? So my loose area where I think it might head to is right in here, where you see this blue line, right around 15,400. Do I believe in evolution? Sure. I think we all evolve. I think if you put anybody in any situation, they're going to adapt to their surroundings and figure it out and learn. I mean, I think that if you look at what Darwin did and understanding the Galapagos finch, I think it's somewhat interesting to see how we adapt. Every one of us is adapting to certain things, whether that's a relationship, whether that's having a new pet. We adapt and we change ourselves to be what we think is the best we can with that environment. So I believe in evolution, not necessarily, going all the way back to a microorganism crawling out of the ocean, but let's not go into my religious beliefs. I believe in evolution and adaptation, yes. So if we look at this, the main one I use, and you guys notice if we click here, you have fib channels, you've got fib time zones, you've got fib speed resistance fan, fib circles, fib spiral, fib speed resistance arcs, fib wedge, fib FU pretty much. There's so many different ones in here, it's stupid. I like to look at them from a retracement perspective, saying, okay, I've had this big move, where might it pull back to? And some of the common numbers here that most people are looking for is 0.382 and 0.618. These are the main two numbers that I'd be looking for in retracement. Now, you can look at other ones as well, but that's pretty much it. And let me go all the way up to there. Now, I think that what their tool does, it kind of makes it, I don't know, it's a little, I'm not a big fan of all the lines it puts on the colors, but you could stretch this out even further. As long as the top is going right across that arc, it looks like Pride Week here at TraderMerlin. You'll notice that this current sell-off came right down to what's called a 50% retracement, which is technically not a fib number, but it's just a number that people use. We hit that today on the Nasdaq and ripped up from it. It also was the point where you had a rally, an indecision candle, and then another big rally out of it. So you had this pause, and it's right at that same point. So this is, I would say, a point of confluence where you have an impulse, a pause or a correction, and then another impulse out. As we retrace back into that, that might be an area where I'm thinking about buying it. Well, it lines up perfectly with a 50% retracement, which validates it. This zone right here, and again, if I was to draw a zone for fibs based off this guy, I know I do it different than some of your OTA instructors. Sorry, it's just the way I do it. That would be my zone. You'll notice at the very bottom of it is 0.618, which is a fib retracement level. So, yes, Tony, I like to use it as an odds enhancer. Right? It's just another little layer, but ultimately I'm making this trade because of price, right? And as you guys notice, I don't even have grid lines. I try to keep things as simple as possible, but that's ultimately the simplicity of it and how I'm trying to make my trades. But we'll also add on, I like fibs. I do like Fibonacci. I like stochastics. I like Bollinger Bands. I like moving averages. I like RSI. You just got to know when to use them, right? You don't want to use them all the time, and you don't want to be letting those make the trades for you. All right, we good? Got any other little last-minute questions here? I think we should probably do a full in-depth show, kind of the history of fibs and why it's important, and learn the true name of Leonardo Pisano Bonaccio, which was Fibonacci, the guy that came up with the whole number sequence. All right, I think that's going to do it for me, guys. I got a bunch to do. It's Friday. I've got a little bit left in this whiskey. I'm going to go out and enjoy some sunshine. So you guys can do me a favor. If you have questions, comments, things you want me to discuss next week, we will have Bill Addis on the program for bonds on Tuesday. Will be Bill Addis, so I got a guest next week. Woo! If you have something else you want me to discuss, send it at TraderMerlin@gmail.com. That'll get you, questions over to me. Again, I have been putting the cryptocurrency course, at least the free cryptocurrency course, in the link to the description down below the video, which I will probably mention every week, trying to get more people to watch that. But feel free to check that one out or share it with anybody you like. And that said, hope you guys have a fantastic weekend. Do something fun. And for those of you who would like to be a part of this December challenge, gotta let me know. Send it on in to TraderMerlin@gmail.com so we can get you on the list, because right now it's me and Tom. We got the lonely 2 numbers up there, but we're going to stick to it and hopefully get ourselves in better shape for the month of December. All right, everybody. Thank you so much. Have a fantastic weekend. We'll see you on Monday.